Hey traders, welcome back to the weekly Forex Forecast. Last week was quite a slow week in the Forex markets. You can see the dollar really hasn't gone anywhere. It's been consolidating, and the most likely reason for this is FOMC coming up this Wednesday. So this week is likely to be a big week, especially for the dollar, but as the dollar moves, this brings with it volatility in all of the Forex pairs. And you can see heading into FOMC, I don't expect the dollar to do too much other than to continue to correct. However, we have broken out, as I pointed out in previous videos, of the 104.98, and this represents a minor breakout relative to the 107.35, which is a major breakout level. And it does look like we could be heading into that and possibly through it next week after FOMC. And going into next week, dollar long plays are going to be high up on my watch list post FOMC because I don't think the dollar will do anything before FOMC. And very often, major breakouts do come on major news events like FOMC and interest rate decision or CPI report. So if you have a look at the performance metrics going into next week, the US dollar is the number one long idea that we should be looking at based on the hedge dash scoring system. And we also have next week not just FOMC on the Wednesday, but we have non-farm payrolls coming out on Friday as well. So next week is likely to be quite a big week in the markets, especially in the Forex markets. To the downside, the Japanese yen is still the number one short idea. Now, I've left this out recently because of the risk of intervention. And it does look like we may have actually had Japanese intervention. You can see that we are seeing extreme fear coming into Japanese yen on a daily basis. This generally shows a 95% chance of pausing or reversing higher. So I do think there's going to be a pause in the yen. And if we have a quick look at the yen, you can see real fear coming into the Japanese yen on Friday. And we had this big sell-off. Why? Because we had the BOJ meeting and they more or less kept things as they did in the previous meeting. They did remove wording about buying bonds, so it opens the door to actually buying slightly less bonds. In other words, a bit of quantitative tightening. However, we also saw on the Friday soft CPI coming out of Japan. And this causes the Bank of Japan, the Ministry of Finance, a big problem because it's difficult for them to raise rates when inflation is low, because what they're going to do is they're going to cause deflation, which they've been fighting for a very long time. So the BOJ, the Ministry of Finance, they are somewhat trapped, and it looks like they may have attempted to intervene on Friday, and it was immediately reversed. And this is pretty bad news because it shows that the market, despite the intervention, is really not buying this idea that the Japanese yen is heading higher anytime soon. Why? Because they can't normalize rates because of the weak inflationary prints. They're going to send their economy into a deflationary spiral potentially. And so the release valve is the Japanese yen, and this is what we're seeing. And of course, this also sets up a big problem because Japan holds US treasuries, and in order to prop up the Japanese yen, they may have to sell US treasuries. But if they sell US treasuries, what this is going to do is this is going to cause interest rates in the US to go higher. So US interest rates go higher. Why? Because as bonds are sold, the yield on them goes up. And if Japan sells their US treasuries in order to buy Japanese yen, because of course what they want to do is, they want to sell the US treasuries. In other words, they're selling dollars because these are in dollars, and they're buying the Japanese yen, and that intervention pushes the yen higher. However, selling US treasuries causes US interest rates to go up, and this increases the interest burden in America because as interest rates go up in the US of course has to pay more interest on the debt that it owes. So the US does not want Japan to sell US treasuries, but if it doesn't sell US treasuries, it's going to see a continuation of the bleeding of the Japanese yen. And so it doesn't look like there's any way out of this for the Ministry of Finance, the Bank of Japan for the time being, and this kind of bleeding of the Japanese yen, albeit with bounces, is likely to continue. And this is also likely going to be supportive of the US dollar. So we will look at a couple of the yen pairs once again, but just beware if you are short-term trading them, you do have that risk of intervention with what's going on in the Japanese yen. So we're going to look at, for the first time in a while, but again, bear in mind there are risks around short-term trading the yen. We're going to look at US dollar yen, CAD yen, and also Aussie yen to the upside. We are also going to look at the dollar pairs, namely New Zealand dollar, pound dollar, and we can look at US dollar franc and also euro dollar. And we're also going to look at the CAD pairs versus the New Zealand. So New Zealand CAD to the downside, pound CAD to the downside, and CAD franc to the upside. And we'll also look at the Aussie pairs to the upside. So these are the three currencies I'm looking to be long, primarily versus the New Zealand dollar, the pound, the Swiss franc, and the euro somewhat, and also the yen. But the yen, although we're going to look at it again in today's video, which we haven't been doing recently, because of what looks like failed intervention, this is something that could be considered heading into next week. But just bear in mind, it is likely going to need to pull back for a few days, probably into FOMC as well. Okay, so let's move on to the watch list, starting with crude oil, as we always do. Now, crude oil isn't as good a long play as it has been when it was trading to the upside. This was a fantastic long opportunity. However, I am still bullish on balance, and I do favor long positions. So what I'm looking for next week is any pullback. I want to see this correct away from the upper bound. I'm going to be looking for potentially an intra-week breakout. You see the rally, you get the kind of bull flag, and then the follow through to the upside into the 87.01. And alternatively, if we start to push down and we take out this low and we start to trade below the 81.27, once we breach the 81.27, especially if we test these lows over here, so we're becoming oversold on the week, because once you step outside of these bounds, you essentially have a 30% chance of continuing, or in other words, a 70% chance of pausing or reversing at and just above these upper and lower bounds. If we breach this and we test support, this is going to be a place I'm going to be looking for a potential long opportunity for 1 or 2 days to the upside. Okay, so moving on to the Forex pairs, starting with the US dollar pairs, we'll look at the Japanese yen pairs at the end. Even though the yen is a good short, again, because of that risk of intervention, although it does look like if you have a wide enough stop, you should be able to avoid any real reversal in that. But because of the risks around that, we'll put the yen pairs at the end. Starting with the dollar pairs, of course, FOMC, this does mean that the markets probably won't do anything before FOMC, especially the US dollar pairs. But I can only be long the dollar or do nothing next week. I cannot sell the US dollar. Last week, we did trade into the upper bound. It was right here. I know this because I shorted this. This was one that I shared with members last week. And we did have a nice sell-off. We had a down day. But going into next week, is this going to continue lower? We tested the upper bound. Normally, you would expect with the test of the upper bound, the following week, this to continue lower. Maybe you get that intra-week breakout. It kind of alternates like that. But with FOMC, really anything can happen on FOMC. So I'm looking for one of two things next week. I think we're going to see the New Zealand dollar doing nothing into Wednesday. And then if we break out in the direction of the trend, because we get a hawkish Fed, or for whatever reason, we get a bullish dollar from FOMC, I'm going to be looking for the pullback and a potential intra-week breakout down to the 0.5864. And you can also look onto the prior low. The prior low here is a good target. If we do test the low bound, we'll probably push through to here. Or the second setup I'm going to look at in New Zealand dollar is if we, for whatever reason, get a weaker dollar from FOMC and we start to trade above the 0.60141. This is going to be a place, maybe not straight away, especially if it's a very bearish catalyst, but certainly, maybe coming into Thursday morning, I would be looking above the 0.60141 for potential shorts in New Zealand dollar for 1 or 2 days into the end of the week. Next is pound dollar. Again, I can either short this or do nothing next week. So what I'm going to be looking for is I'm going to be looking for this to pretty much do nothing into Wednesday. And then on Wednesday, very much like the New Zealand dollar, I'm going to be looking for a potential breakdown on FOMC, a pullback, and then a follow through into the 1.23722 for a short-term trade, and very possibly onto the prior low here as well, although it's quite deep through here, if we get a strong catalyst onto the prior low here in pound dollar. The second thing I'm going to be looking for, because I can either short this asset or do nothing, I can't buy this asset next week, is if for whatever reason we get a bigger pullback in pound dollar because we get a weaker dollar from FOMC, then above the 1.26148 next week, I am going to be looking for a potential reversal for 1 or 2 days in pound dollar. Next is US dollar franc. Now, I am again going to be looking at this as an FOMC setup, because if you get involved intra-week, it will probably just chop around and do nothing. So I'm going to look for this market to consolidate into FOMC. And again, if we get that bullish catalyst, look for the breakout. Very often, it will pull back, and then you get the follow-through opportunity into the 0.92235. Or alternatively, if we get a weaker US dollar, and therefore we see US dollar Swiss franc sell off, anywhere below the 0.90625 especially if it's a strong sell-off and we start to test lows down here. Anytime you breach these levels and you start to test lows underneath it, or breach the upper bound, start to test highs, that's a good area to start to look for a pause, with that confluence of being oversold on the week and also trading into support for a reversal for 1 or 2 days to the upside. Moving on to euro dollar. Now, euro dollar was a really nice market last week. We tested, basically top ticked the upper bound. And again, this was another one that I shorted last week and shared with members. And we got this nice sell-off. This is the kind of sell-off that you really want to see if you trade into these upper or lower bounds. It should almost be straight away. You kind of want these markets to sell off straight away. That's exactly what happened last week once we tested the upper bound in euro dollar. So going into this week again, I would be expecting this maybe to break out and continue lower. But with FOMC, it's very, very hard to say. So again, looking for an FOMC setup, I'm going to be looking for this market to pause and correct into FOMC. And if we get reactively a stronger dollar, you can look for the pullback and the follow through down to the prior low, which sits right at the lower bound as well. So a really nice profit taking opportunity for any kind of intra-week trades if you're not looking to hold this longer term at the 1.0603. And of course, also, if we get a weaker dollar and we see euro dollar pushing to the upside above the 1.0783, I can only short this next week. So I'm going to be looking above this area for a potential reversal for 1 or 2 days to the downside in euro dollar. Moving on to the CAD pairs then, starting with New Zealand CAD, you can see this market is making its way probably down to the low and onto the 0.80501. And we've already started to flag from that sell-off that you can see down here, this candle where we have this bigger sell-off and then we kind of wick and we kind of consolidate and pull back. So any breakout intra-week in this market is viewed as an opportunity to look for a pullback and a follow-through, a flag, bear flag into the 0.8050. And again, often you usually get in the 4-hour time frame 1, sometimes 2, but generally 1 kind of bull or bear flag within a given week. And if we continue to hold this trend and instead of breaking out, we just bounce and we consolidate above the 0.8191, this is where I'd be looking, especially if we breach this and we test this high, for example. This would be the area I'd be looking for a 1 or 2 day reversal in New Zealand CAD next week. Next is pound CAD. Now I can either short this or do nothing. Buying this is not an option for me next week. And you can see we broke down below this low with momentum, and you can see stop losses getting triggered and all the longs covering their long positions, and you get new breakout traders stepping in and shorting below here, and this causes this momentum. Momentum precedes price very often. And what we're seeing here is we're seeing this kind of short covering rally, a snapback as traders book profits, but it's running out of steam. So what I'm going to be looking for is, because we've pulled back and retested under here as well, any breakout from here is viewed as an opportunity to look for that bear flag setup into the 1.69506 and probably onto the prior low over here as well. And alternatively, if we breach the low over here and we pull all the way back and we go above the 1.72076, and what I would like to see is a push above here and above these prior highs, this would give me confidence to start to look for a 1 or 2 day reversal in this asset to the downside next week. Next is CAD franc. Now CAD franc has a fairly nice setup here because the prior high which we broke out after this kind of, we had the Israeli retaliation against Iran, and then we kind of snapped back as everything kind of de-escalated somewhat for now. And the prior high, which we broke, sits right at the lower bound of the 0.66337. So any pullback in this market, I am going to be looking for a bull flag breakout next week, that momentum, a pullback, and then a rally into the 0.6746. But if we continue to come all the way down and test the 0.66337, this sets up a nice setup because we would be stair-stepping, retesting the prior breakout to the upside, so broken resistance turn support at the same time as we turn oversold on the week. So this would be a great place to look for a 1 or 2 day reversal to the upside in CAD franc next week. Moving on to the Aussie pairs then, starting with Aussie New Zealand. Now I can either buy this or do nothing next week, and you can see this has already started to break out of this quite significant correction here in the 4 hours, and we are making new highs in Aussie New Zealand. So very simply, any pullback in this market next week is viewed as an opportunity to look for an intra-week breakout into the upper bound at the 1.10648. And alternatively, if we pull back and we come down, we hold this and we correct all the way into and below the 1.09352, especially if we breach this. And again, you can look for those prior key areas of resistance or support you know, once we turn oversold, here's a key area of support. We start to test this low or this high and we're oversold on the week. That's going to be a great place to look for a 1 or 2 day reversal to the upside in Aussie New Zealand next week. Next is Pound Aussie. I can either short this or do nothing next week. I cannot buy this asset. So what I want to see is, and you can see we've got this big momentum. There is your double top with the break below the low confirmed, and then you get this momentum. And now we're consolidating as shorts are booking profits. And any pullback in this market is viewed as an opportunity to look for a breakout, a bear flag, sell off, pullback, bear flag for an opportunity to short intra-week down to the 1.89557. Or alternatively, if we pull back, we test and breach the 1.92883. We become overbought on the week. And especially if we breach this and we test this low, that's going to be a great place to start to look for a 1 or 2 day reversal in Pound Aussie next week. And the final Aussie pair here before we move on to the Japanese yen pairs is Aussie franc. I can either buy this or do nothing. I cannot sell this market next week. And you can see we've got pretty strong momentum here. I mean, all of this is one move up. There's no correction here, no consolidation. So I would be looking for this to correct and consolidate heading into next week. It may even consolidate into FOMC, because if the dollar lacks volatility, you may find a number of the Forex pairs lack volatility, and then everything starts to move on Wednesday after FOMC. Even though it doesn't have a US dollar in it, that could very well be what happens. So I'm looking for a correction next week. That is the opportunity for a breakout, a pullback, and a follow through into 0.60391. And alternatively, if we pull all the way back and we correct into the 0.59115, now we don't really have any key areas of support very close. This is the nearest one here. But any breach of this level, I'm going to be looking for, and I like to drop down to lower time frames, 1 hour, 15 minute, 5 minute, look for signs of exhaustion, and then look for a 1 or 2 day reversal in Aussie franc below the 0.59115 next week. Okay, so wrapping up the Forex universe with the yen pairs before we move on to gold and silver, bringing back the yen pairs, and we did see this wick here. You can see this wick. This is what looked like intervention, and actually it looks like we may have had some over here, all to lesser or more degrees. But the overriding theme here is that it looks like we're getting intervention on the quiet, and basically none of it's working. And this actually causes a bigger problem, in my opinion, for the Bank of Japan on the Ministry of Finance, which is when traders see that you're constantly intervening and it doesn't work, that can actually cause more of a problem than not intervening at all and having the threat of intervention kind of hanging over the markets, because it puts people off from selling the yen with the threat of intervention being there. But it's not much of a threat if you're continually doing it and the market is not responding. So with that in mind, just bear in mind, there is risk to intervention in the yen pairs. If you want to short them, you are taking that risk on. But any pullback in this market is viewed as an opportunity to look for a bear flag and a breakout. We've seen this multiple times. There's one and a rally. Here's a breakout and a kind of sideways and then a rally. Here's another one. We got the intervention there and then a big rally. This is a huge move, so this is probably going to correct first. But again, you can look for those breakouts. The upper bound is the 160.50. And alternatively, if we pull back and we breach the 156.18, this is going to be a place you can look for 1 or 2 day reversal to the upside in US dollar yen. Next is CAD yen. Again, we had that big rally. So any pullback in this market, I do think we're probably going to need to correct first, is simply viewed as yet another opportunity to look for a breakout, a pullback, and a rally into the 117.38 next week. And alternatively, if we sell off and we breach the 114.29, this is below this level here, and there's a low. You know, perhaps we come down, we test the intervention low. This would be the area I'd be looking for exhaustion on lower time frames and looking for a 1 or 2 day reversal to the upside in this market. And the final Forex pair before we move on to gold and silver is Aussie yen. Again, it looks like this is almost going vertical. Any pullback, and the pullback is the opportunity to once again look for a breakout to the upside in this asset and further advances into the 104.96. And again, alternatively, if we breach, and there's a prior high over here, if we breach the 101.95 and we test this high especially, and we kind of stair step this is going to be a great place to drop down to lower time frames, look for those kind of exhaustion signals, and look for that 1 or 2 day reversal to the upside in Aussie yen next week. Okay, so wrapping up the video with gold and silver, and how I would like to use gold and silver next week is reactively. So again, if you want to fade these from the upper and lower bounds, of course, free to do that. However, I like the fact that we have both gold and silver. They're slightly overbought. We have a stronger dollar, but we have FOMC next week, and that could weaken or strengthen the dollar depending on the outcome. So what I'd like to see is if we get a weaker dollar from FOMC, then I would be looking at gold to the upside. And if we get a stronger dollar from FOMC, then I'm going to be pivoting for a reactive breakout to the downside in silver. So coming into next week, I'm going to be looking for this to consolidate into FOMC, and I'm going to be looking for a potential breakout on FOMC. And if we get that as the US dollar sells off, I'm going to be looking for a pullback and a potential rally into the upper bound of the prior high at the 2425.44. My preference is for silver shorts next week over gold longs because of my bullish bias in the dollar. Again, if you want to play these from the upper and lower bounds with your own strategies, of course you can do that, but this is what I'm personally going to be looking for next week. It's a reactive play of being either long or short, gold or silver, depending on the outcome of FOMC. And last but not least, we have silver, and silver is actually my preference. So silver shorts are my preference next week. And even technically, not just because I have a stronger bias in the dollar, but even technically you can see we have this kind of momentum to the downside and we've got this bear flag. So if this continues into Wednesday, what I'm going to be looking for in silver is if we get a stronger dollar from FOMC and we break down like this, I'm going to be looking for the pullback and the follow through into the prior low and right into the prior high as well. So it's a nice target here for short-term trading into the 25.69. Again, I know the video is called the weekly Forex Forecast, but I'm not actually trying to predict all of these markets. What I really want to do is I want to predict the probabilities. We're forecasting probabilities. In other words, this market is most likely to go higher, etc. But we want to also be reactive where we can be, because ultimately, if you try and predict FOMC and you get it wrong, then you've got no opportunity to trade. But if you have a plan A and a plan B for whatever the outcome is, you're more likely to get a setup and a tradable opportunity post FOMC next week. So that is it from me for today, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the GMT training room each day, where I look at the best markets as well as sharing real-time setups that I'm personally looking at trading with members as part of our GMT training program. Don't forget, you can also get a 2-week free trial to the cutting-edge hedge-trading app used in today's video by heading over to www.hedge-.com.